my intro indicated, yes, it's true, I really am Brandee McHale. I currently head up community investing and development at Citi. What that very nice intro, however, did not indicate is I really do believe I am fan club #1, FHN all the way. I saw it from the beginning, and I still see it now. 20 years ago, I was a program officer at the Ford Foundation, and my first grantee and my first major project was providing funding to establish what we know today as the Financial Health Network. I am really grateful to have been part of this effort since that first year, and again, really honored to help kick off this milestone gathering. As I thought about today, and I thought about this milestone moment, 20 years, and by the way, it's a lot of work to get to 20 years. It's a lot of research, it's a lot of convenings, it's a lot of demonstration projects, it's a heck of a lot of fundraising and managing your funders. And so while we want to celebrate that, the thing about milestone anniversaries, whether it's in your personal life or your professional life, is that we do approach them and think of them as a chance to look back fondly on the past, to reminisce, to tell stories. I promise, Jen Tesher, wherever you are, I will not tell some of those stories. What happens at an FHN Emerge conference stays at an Emerge conference, but milestone anniversaries really are designed to serve as an affirmation for the future. We use these moments to launch ourselves into what's next and to bring that day one, year one, that newlywed energy along with a lot of lessons learned into the years ahead. We don't just simply want to look at how far we've come, but I really want to encourage us to look at how we've changed, how we've evolved, and reflect on what it took to get here today, what it's going to take to get to tomorrow, and how we are still committed to one another. FHN began with, how can we bank the unbanked? It wasn't actually a simple solution, but it was a very specific mandate. 20 years ago, 2004, far too many households lacked bank accounts, forcing them to rely on costly alternative financial services. Subprime lending was proliferating. Households at all levels, but especially lower-income households, face significant barriers to accumulating and safeguarding wealth. Advocates, financial institutions, local governments, regulators, we all joined together to address this challenge. And today, we can say that the proportion of households who are unbanked has indeed dropped significantly. So why aren't we here to wrap it up? To high-five each other, to say, you know what, wow, we did it. I want to be able to say, look, you know what, our thing that we were trying to prove with all that philanthropic funding, it actually worked. Well, it did. But the other thing that worked is that along the way, we began to see that our understanding of the challenge itself has changed. Through FHN's leadership and groundbreaking work, and actually the work that all of you do day in and day out, we now have a much more nuanced understanding of people's economic lives. While bank accounts are important, and technically I do represent a financial institution, so please open bank accounts, individuals need so much more to be financially healthy, to be able to spend, save, borrow, and plan in ways that enable them to pursue opportunities and to develop the resilience to navigate the everyday crisis moments as well as the macro crisis moments that can permanently derail individuals, households, and whole communities on the journey to financial well-being. The other thing that's happened over this time period is that we weren't using words like wealth inequity. In fact, we weren't even using inequity 20 years ago. But the issue of wealth inequity and wealth gaps, the country's changing demographics, a warming planet, the connection between financial health and climate change, and a shrinking middle class have come to the forefront and really requires us to think differently and to take holistic action and have that action from a variety of sectors and industries. And perhaps the most stark shift between 20 years ago and today is how technology has changed it all. Revolutionized the way we live, we work, we bank, first through the internet, which is actually what we were focused on 20 years ago, then mobile phones, offering incredible opportunity and access, but now we also know there are potentially a whole new set of emerging risks. Earlier this year, the Citi Foundation and FHN did team up to start a new project, Financial Health Frontiers, a series of deep dive conversations, research, and engagement efforts to bring clarity and attention to what all of us here today are collectively trying to accomplish and accelerate this work. What we have done in 20 years has been amazing. We need to do even more faster. So if you are brand new to this space, please don't feel like, wait a minute, I'm coming at the tail end of something. We do want to use this session to take stock of the accomplishments of the past 20 years and the wisdom gained, but it's all to really reaffirm and to accelerate bringing us closer to the successes of tomorrow. So, enough from me. My wisdom is only as good as the company that I keep, and I'm very happy to introduce you to 3 longtime champions and innovators in this work to kick things off. So I'd like to welcome to the stage my panelists. Raj is here with us. He is a managing partner of Fenway, which is a venture investment firm focused on the financial services sector. He's done a ton in the space with venture capital and with innovators. But fun fact, and one of the reasons why we have him here today, is he was the first deputy director at the US Consumer Financial Protection Bureau, and really the roadmap and the architecture that he put in place for the CFPB caused it to thrive and is the institution that we have today. So we're going to talk about some policy stuff with him. Cathie Mahon, to my left. Cathie leads an incredible financial inclusion intermediary organization called Inclusiv, which is focused, again, on building more inclusive economies through community-owned and community-controlled financial institutions. Her work and her organization occupy a very special part of the financial services ecosystem. Cathie, before she came into Inclusiv, though, worked at the municipal government level and was the deputy commissioner at the New York City Department of Consumer Affairs, where she started the first New York City Office of Financial Empowerment, which was a first-of-its-kind effort at the municipal level to drive financial inclusion. And in the middle here, we have Roy Sosa. Roy is our resident innovator. He is a co-founder and chairman of Ouro Global, which is a global financial technology company. He is a real deal entrepreneur. I know that is at the heart of the work here at Emerge. He's a pioneer in the prepaid debit card industry. He's the co-founder of NetSpend, a company that for the past 20 years have served millions of unbanked Americans. He's been a leading voice for underserved consumers around the world and serves on the board of many important financial inclusion institutions. So, it's a lot of wisdom here. Let's warm it up and let me ask you, so how did what was it like 20 years ago? What were you focused on 20 years ago? I think it's often interesting to hear where people were 20 years ago and where they are today, and we're going to fill in that journey. But tell me what it was like 20 years ago. Roy?
Well, 20 years ago, I actually had the pleasure of being here in Chicago, visiting with Jennifer Tescher and Ariane Schutte, as they were still part of Shortband and the Center for Financial Services Innovation. At the time, I was on my almost fifth year as CEO, co-founder of NetSpend Corporation, a company that, as you said, kind of was at the very beginning of prepaid. And really this concept of branchless banking. And at the time we didn't have terms like fintech, unicorns, neobanks. We're just doing all those things at the time. It's incredible to think about the fact that we're back to the beginning. It goes back to that whole concept of Ouro, reinvention. And I'm super excited about what the next 25 years will bring to us. For me, this is year one of chapter 2, one that I hope is as successful and exciting. When you take something from an idea, $750, to now we're approaching $1 trillion in transaction volume at Ouro, I can only imagine where we will be 25 years from now.
It's great. I think one of the things that we have done, again, with the leadership of many in this room, is to really make the business case for financial inclusion and financial health, and that is exactly what you have done, is make the business case and prove the theory that you can do well by doing good. Cathie?
So 20 years ago, as you know, Brandee, we were working together, actually. We were just forming the Asset Funders Network, which was and is a network of philanthropic organizations that supports asset building. And we were very much in the throes of thinking about how do we take this small field of these incredibly committed nonprofit organizations who were trying to weave in conversations about financial health, financial well-being, asset building, and how do we kind of invest and direct philanthropic dollars to that. And at the time, it seemed like, Sisyphus with the, pushing the boulder up the hill. And sort of fast forward, shortly thereafter, I left and in 2006 went to go work for the City of New York. And at that moment, the City of New York, along with other cities like San Francisco and San Antonio and Seattle, were beginning to say, how do we take these lessons learned from this field of mighty nonprofits and incorporate that at a systems level in municipal government? And municipal government works at scale, right? So we were all of a sudden and very quickly leveraging ourselves up into operating at a greater degree of scale. The financial crisis happened. I think we all realized that we needed to pivot a bit, and I think we started changing a little bit of our concept of financial inclusion. It's not just about getting capital to people who have historically been locked out. It's the quality of the capital, and it's the capacity and the support that people need to be able to identify good products versus not so good products. And that was in 2012. I then shifted over to work at Inclusiv and start working with on-the-ground community lenders and saying, how do we design better solutions?
So Cathie, you raised, well, two things. One I'll say is, I think the work at the municipal government level was really an eye-opener because it helped us to understand we can't just build products, we can't just improve the supply, we have to simultaneously increase demand and meet consumers where they are. So I think there were a whole set of lessons learned that I hope we can dig into. But you also raised the financial crisis. I would say the first financial crisis. There's that expression, like never waste a crisis, never let a crisis go to waste. It did bring new energy and fervor to what we were doing, but it also really was a game changer. So Raj, talk to us a little bit about that time period.
Sure. First of all, thank you to our host for the invitation. It's a real pleasure to be here. It's a pleasure to sit here and look at the skyline behind you. Well, you have to look at us, so sorry about that. 20 years ago, I was already a little bit in the mix on these issues, at least in part because 35 years ago, I started my career in financial services. Over the years, I've been a lawyer to investment banker to consultant for regulator of and now investor in financial services firms of more or less all types. But 20 years ago, I think almost to the month, I was at Capital One running a little team focused on M&A and corporate development. And one of the projects we had going was looking at some upstarts in at that time called the prepaid, the stored value world, and developing theses on whether or not we should buy Green Dot or NetSpend. And after I left, there was an announcement that Capital One was going to buy NetSpend, and that deal never happened, which is why Capital One is undaunted by the idea of announcements that do not close.
I'm still waiting for the $750 million.
Get in line, I guess. In any event, that experience actually was the first time that I really opened my eyes to this set of customers that this organization cares the most about. And essentially, my eyes have never been shut since then. I went from Capital One to Wall Street, did a stint in public policy as the acting head of the CFPB and then the deputy director, and have always been focused on this set of problems for the same reason that I was always trying to recruit people to CFPB. And I see a lot of familiar faces, so many of you have heard this speech before, but you ought to work on things knowing that your only binding constraint, your only wasting asset is your time. So you ought to work on things that are important, you ought to work on stuff that you actually can succeed at, and you should work on things that are difficult. And I think if you look right at the intersection of those three criteria, you're going to find the mission of this organization. And so I'm pleased to be here.
Thank you. So it is a milestone moment. It is an anniversary. We tend to, we want to focus on the good. So let's talk a little bit about what's been a real bright spot. What's really stood out for each of you as an important advancement over the past 20 years of building this field of financial health?
I would say it's become mainstream. It went from being experiments, from being initiatives, from being things that people push because of passion, to now things that is the core of the industry. I mean, when we think about, again, back 20 years ago, this is pre-mobile phones explosion, pre-social media, pre-gig economy. And now you think about the fact that 60 million Americans get their salaries, their wages from gig work and on-demand economy. It sort of forced the technology, the constructs, the passion, the advancement of regulation to where it needed to be all along. So I think that's the biggest bright spot. It's like it is now, it's here. It's not a small niche project. If you're not playing in it, it's you're outside of the core of the engine of not only America but in the world.
Yeah, thank you.
I would say, I think a major bright spot has been the way in which we've been able to establish strategic partnerships. And, I think back to when I started at Inclusiv in 2012, the first funding partner I had was Citi, and the first strategic partner I had was the Financial Health Network. And we created kind of this combination of how do we pair up and connect meaningfully in communities, the financial coaching, the financial supports, the asset building work with the lenders and the products and the services. And I think at the time even then we were thinking strategic partnerships at that community level, but the ability then to sort of take hold and to tap into all the tremendous innovation that was going on in the private sector, and the fact that Financial Health Network was leading kind of innovation and incubation activities and networks. It enabled us to really think more strategically about how we open up as smaller scale community-based lenders to all of the innovation that was available to us, and how that could kind of leapfrog our growth. And we've experienced incredible scale and incredible pathway to growth and even scale. At the time, I think, back when 20 years ago, our network was about 200 lenders that served kind of on average, maybe a couple thousand people in their communities each. We now have a network that's over 500 institutions. We serve 20 million Americans. We have $360 billion of assets under management. And I say that to say, we've been able to leapfrog and plug into new ways of reaching people and engaging consumers that's enabled our network and our work to really scale. So it's a bright spot.
Let me say congratulations. It's really those numbers. I had not realized the amount of scale currently in the network, and I would say that I do think the community-based institutions are also been a really important laboratory for us to really understand and deepen our understanding of the consumer. Raj?
I'm going to give you a highlight that I think happened by accident, and one that's important, but might turn out to be a highlight over the course of the next 5 years. So One highlight for me, and this will sound slightly self-interested, is that I think that the notion of the CFPB as a more or less universal conduct regulator in consumer finance in the US was a big deal by design, and it has turned out to be a big deal in practice. I am a believer, like most people, in the power of competitive markets to be able to identify customer needs and satisfy them, and in their competition create consumer surplus, but it's very hard for that to happen if people are playing by different rules. And having a universal conduct regulator solves, if people do their jobs right and have the right support, solves that problem. And so I'm pleased with that. One highlight that I think is accidental is Senator Durbin in the room, this being Chicago. So let's talk about him. So I was not then, and I'm sort of eyebrow raising about sort of the wisdom of the Durbin Amendment as part of Dodd-Frank. But one thing that happened as a result, it happened to marry up a bunch of quite enthusiastic little banks with a number of venture-backed, very enthusiastic and innovative technology people, and the result has been quite extraordinary. Indeed, like we're all proud of like looking at the FDIC's quarter-on-quarter reduction in the number of unbanked and underbanked households. If you do the arithmetic on it, more than 100% of that reduction you can attribute to the growth of firms like Netspend and Green Dot and Chime and others. And that's, listen, we'll take it because I don't know if you necessarily would draw that up to begin with, but so far so good. And then the third big question mark, but I think could be quite a big deal, is the proposal on Section 1033, the so-called open banking, kind of rulemaking by the CFPB. Just one of the many ways in which we can peel away some of the historical structural attributes of banks, in this case, access to customer data, and hopefully democratize that in a way that will yield good outcomes. I know it took 14 years to get it. I know that, and I know it's not done yet, but I am enthusiastic about the prospects.
I think what's really interesting and why I was so excited to have the three of you on this panel is that you don't often, it often happens sequentially that you say, well, we need to engage the private sector, we need to engage the public sector, we need to engage the community. And what's been, I think, created exponential impact is that all of this interaction has happened simultaneously. It makes it more complex, but I think it's actually been accelerated the results, and that, again, that ability to have this this integrated effort really didn't happen accidentally, and it's really taken that thinking about, again, how do we build something that involves multiple players, and the partnership's so important. But for all that we've seen, and we know, economic uncertainty is increasing. And I actually come here today thinking, it's what really concerns me, and I think over the past 20 years, we've had lots of periods of economic uncertainty, but pessimism amongst consumers that things will get better is increasing. And so despite the clear improvements we've made in financial inclusion and the number of households who are banked, reducing the number of unbanked households, there's such a level of financial vulnerability. Currently, 17%, it's estimated, of all US households are financially vulnerable, and those numbers actually increase when you look at this issue by race and gender. There is not a person in this room that is not concerned about their financial future. But for more than a quarter of the population, the financial future and that uncertainty is as soon as tomorrow. We just have to continue to accelerate innovation. But good ideas in this time period aren't enough. We have to build bridges across the divisiveness and continue to align stakeholders around ideas that work. So with that as a backdrop, what trends do you see that give you hope and do you think are the most important things that we should be prioritizing moving forward?
So I can dive in, and it's both a big immediate challenge as well as a tremendous hope. So to the point of consumers not feeling things are getting better, they're feeling more and more financially vulnerable. Right now, we're about to enter into summer months where people are going to see their energy costs and their utility bills explode. And we have a moment of opportunity and a need to be able to help consumers dive into a changing economy, a greening economy, and be able to benefit financially from that. And so, I'll take a little bit of a step back on as far as kind of a big hope and a new bright spot for our horizon is, the Biden-Harris administration passed the Inflation Reduction Act, and included in that were a whole, huge number of supports, subsidies, and benefits to support low-income and disadvantaged people and communities to be able to transition into a greening economy, to lower their household costs and household energy burdens, one of which is the Greenhouse Gas Reduction Fund, which established $27 billion to be able to kind of quickly invest in opportunities to really green low-income communities and make people's lives better. So Inclusiv has been lucky enough to be one of the 8 selected recipients of this Greenhouse Gas Reduction Fund money. And it's going to enable us in the coming months really, to be starting to put some capital out into community-based lenders to help consumers do energy efficient upgrades of their homes, purchase energy efficient appliances, move into being able to purchase electric vehicles and electrification, and not be left behind when this whole economy is greening. And that is the most important thing. There's a moment right now that's ahead of us. From the financial health field, it sort of felt like, well, we don't really do climate. We don't really, work on environmental issues. This is a financial health issue. Everybody in this room who's done financial coaching knows you go through a household budget and you kind of assume that the utilities is just a plug-in number. How much do you pay? $250 a month? All right, well, that's a lot, right? Now we have an opportunity to say, what goes into that $250 a month? Let's get that down to $49 a month, and we can do it. We can do it by making your appliances more efficient, by making your homes more energy efficient, by helping you be able to purchase the means to actually generate your own energy. So I'm a little passionate about it, but I do think this is our moment to really come together as a financial health field and embrace this new climate opportunity and the climate challenge, and make sure that the folks who are already living on the edge are not left behind from the greening economy, and also to help them be prepared for climate events that occur on a regular basis. So, thanks.
Game-changing for sure. What do you think?
Well, I love that, and let me just take that and maybe generalize a little bit to, I would love to see us collectively have a shift in focus from, look, when I came down to Treasury after Dodd-Frank was signed, we were very focused, I certainly was focused on just making sure that the financial services system doesn't make lives worse. How about that step one, stop making lives worse. But it's sometimes easy to forget in your middle age now. Like, look around. The system actually is working pretty well, even when things seemed to be becoming a calamity last spring. Kind of stopped it in its tracks. So why don't we turn instead to really focus on our energies and how the financial system can make lives better? And in addition to the category of ideas that you discussed, I would point to 3 in particular. Like, it really takes finance to help most micro businesses extend from being something that you work for to something that works for you. It typically takes finance to get to a place that you can build household wealth through this marvelous tax-deductible thing that is residential housing stock in the U.S. It typically takes finance to take your kid, if you're middle age, and put them through a whoppingly expensive higher education system. And the system we have to finance that is sort of obviously broken. Let's find ways to make it better. So my main kind of hopes is that we collectively take a step back, shift towards the future, and making stuff better for normal people.
Right?
Well, with the benefit of hindsight and looking at all that we've accomplished in the last 25 years, I think that we're at this moment where we have serious problems ahead. When you sort of think about what did the internet do in terms of creating incredible growth, economic growth? I mean, those of us that kind of go back to the 90s, we thought that Japan as an economy was gonna buy half of the United States, right? And everything changed with the internet. We saw it again with mobile phones. We saw it again with social media. One of the things that I think we're missing is the wealth creation has really stayed at the very, initially it was the top 25%, there was the top 10%, there was the top 1%. I would argue right now it's the top 0.5%. And that's a problem because we don't have an issue of giving customers free bank accounts. Customers don't need a free bank account. Customers don't need a sign up here, sign up there. There's plenty of companies like that around the world. What customers need actually is the tools to earn more money, to build wealth, and to know how to use those resources. In a world where we're now accelerating with AI, I can absolutely see how we are going to enter into a world of hopelessness for a lot of people that, by the way, when we think of financial inclusion, it's not just about getting people into the financial system. The economic development at the individual level is essential to create wealth, but it's also essential to create social stability. And we are quickly approaching our 250th anniversary of this experiment in democracy. But I tell you what, this experiment in democracy where we see tensions, not just in the United States, but across the world, is coming because of a sense of hopelessness, where people said, you know what, I'm not getting ahead. We've been offering between 5 and 6% interest on savings since 2004. We've been offering our customers to get their paycheck 2 days ahead of payday since 2004. We've been offering tax alerts since 2004. You know what? The reality is we are now living in a very different world than in 2004. 2004, if I started working as a teller at a bank branch or as a cook at McDonald's, 10 years later, I would stand to be a manager at that branch or at that McDonald's. Today, I start working for Uber or Instacart or Amazon delivering. 10 years later, I'm still doing the same thing. There's no development. And if there's not intellectual development, emotional development, a sense of connectivity, a sense of belonging, then you're not going to have economic development. And if you don't have economic development, you're not going to have social prosperity. So for us, we think that, so what is the opportunity? The opportunity is that same threat that we have in the advancement of technology, we got to leverage it to enable people to have the tools. But it's no longer going to be like in this next chapter of 25 years, I don't find myself in delivering bank accounts. I find myself in delivering tools and in truly empowering people to build more wealth. And it's not just about trading dollars or putting money to work. No, it's enabling them to create wealth.
I cannot think of a better way for us to conclude. Thank you.